Hey, everybody. Welcome back to our business finance series. Today, we're going to be addressing a common dilemma for many taxpayers, especially business owners. Should you itemize or opt for standard deduction? Making this choice wisely can have a significant impact on your tax bill. So, before we get into the topic of itemize or standard, let me introduce myself. So my name is Shane Harris, and around here on these social media streets, I'm also referred to as Shane the Negotiator, and I help coaches, consultants, and service providers who are overwhelmed and lack guidance to achieve true financial freedom. And I do that by providing expert tax and coaching services. That is what I do. That is who I help. So let's get on in. Are we going to itemize or are we going to use the standard deduction? So, understanding the difference. First, let's clarify the difference. The standard deduction is a flat amount the IRS allows you to deduct from your income. No questions asked. Itemized deductions, on the other hand, are specific expenses you're incurred throughout the year that the IRS allows you to deduct. So, when to itemize? Itemizing makes sense when your allowable expenses exceeds the standard deduction amount. So common itemized deduction include your mortgage interest, your state and local taxes, medical expenses, and charitable donations. For business owners, especially those in the consulting or coaching, itemized deductions can include unreimbursed business expenses. These are business expenses that you paid for throughout the year that you did not get the money back from your business. So in the previous session, we talked about accountable plans, but let's just say your business did not have an accountable plan in place, then you can potentially write off some of those deductions some of those expenses that an accountable plan would normally reimburse you for. You can essentially or potentially get those deductions back underneath the unreimbursed business expenses. So let's talk about what the standard deduction rates are. So for 2023, the standard deduction for a single filer is 13,850. So it has increased because in 2020 it was like $12,000. So it has been going up every single year since 2020. For married filing separately, it's the same. So single filers and married filing separately, 13,850. Of course, if you're filing jointly because you're a married couple, then it's 27,700. And for a head of household is 20,800. Okay, so that is the rates for 2023. Let's check out the rates for 2024. So for 2024, that is not going to be when you file your taxes this time. This is going to be next year when you in 2025, when you're filing 2024's taxes, this is the rate. And the standard deduction has gone up again. So for 2024, it's 14,600 for single filers and married filing separately. 29,200. So it's gone up like $2,000, almost $2,000 for a married couple. It's married filing jointly, 29,200. And of course, for head of household is 21,900. So these amounts has been increasing over the years, and rightfully so, because the cost of living is increasing. So it makes sense that the standard deduction is also increasing. So you would itemize if you're itemizing, which all of the things that I just listed, if you had state and local taxes, if you had mortgage interest, medical expenses, charitable donations, or unreimbursed expenses. Let's say you are a single person and you had more than 13,850 in deductions, then you wouldn't want to take this 13,800 as a standard because you'll be losing out. So let's just say your itemized came up to 20,000 and you're a single person. Well, the standard is going to short you. So you definitely don't want to do that. You're going to be short by almost $7,000. So you will want to itemize at this particular time. And of course, if you are, and this is if you're single or if you're married filing separately. Now, the caveat to this, if you are married and you're filing separately, If one spouse itemizes, the other one also has to itemize. That's just the way it rolls. Take it up with the IRS. That's the rules. It's trying to entice you guys to file together so that you can itemize or you can take that standard deduction. But if, let's say, one spouse has 40,000 in things to write off and they decide to itemize, and the other spouse has 4,000 in things to itemize. If that one spouse that has the 40,000 in to itemize, and rightfully so, you probably would want to itemize because you're leaving money on the table. If you don't, you should take that itemized. The other one that has 4,000, it's underneath the standard deduction of 13,850 for married filing separate. However, one can't take the standard and the other one can't itemize. So the one for the 4,000, you kind of get the short end of the stick. You also have to itemize. So that's why during tax season, it is very important that you make nice with your spouse so that you can do one of two things: file together, or if you decide to file separately, you can talk to each other to see what each other filed so you know how to file yours. And it's not this, oh, you file one way, the other one file another, and then it's going to trigger a whoop, whoop, warning, a red flag, and you guys are going to potentially get audited. So that's why when you get married, and I know we're talking about taxes and I'm not getting into relationship stuff, you have to marry the right person or at least play nice during tax season as best as you possibly could and talk to each other, because ultimately, if you're still married, one finances also still affect the other one's finances, especially when it comes to filing your taxes. Okay. So let's continue on. So let's do a case study. Let's consider Sophia's coaching business. So Sophia is a life coach, and her business expenses include home office and business travel and professional developmental courses. So after calculating her expenses, Sophia found that itemizing offered a larger deduction than, of course, that standard amount, reducing her taxable income more effectively. So she decided to itemize versus taking that standard because she got a bigger deduction, and rightfully so. So in addition to that, when I mentioned medical expenses, so there was an old video of me circulating from 3 years ago that's on my Facebook, that's on IG. It may be on YouTube, I'm not sure. I'll have to check and see. And if it's not on YouTube, I'll put that oldie but goodie up on there, or I'll do a remake and do it again to make it a little bit more updated. So if many of you have service animals and you have emotional support animals, you can actually write them off on your taxes as a deduction. Now, we can't claim them on our taxes like we do children. However, we can claim them on our taxes as medical expenses, but it has to be emotional support or it has to be a service animal because they are helping you in your health in some way, either your mental health or physical health. They have to be able to be providing a service, and you can write them off as a medical expense. So if you haven't considered this before, I'm dropping a little bit of extra little something, giving you a little bit extra sauce, giving you the extra secrets. So you can consider this if you haven't been doing it. Of course, you need substantiation, documentation. You got to have documentation from a reputable doctor or medical professional that say that, yes, this person does require the services of this emotional support animal or service animal, whichever one. So in this particular case, you might want to itemize because you might get back more itemizing versus taking that standard deduction. So standard deduction, simplicity and convenience. So the standard deduction is straightforward, it's to the point, and requires less paperwork. So it's a deal. It's deal. It's deal if you don't have significant deduction expenses or if you prefer a simpler tax filing process. So for many individuals, including small businesses and small business owner, it provides an adequate tax relief without needing the details for all these additional record keeping. Now, even though it may require less paperwork, if you are a business owner and you are filing that Schedule C, you want to have detailed records and documentation. I don't care what I just said in terms of standard deduction, meaning less invasive. You want to always have that documentation anyway. Even if they might not sweat you as much, you never know when that time comes when they will. So always, always, always have your documentation. And particularly if you are going to itemize, you want to have every documentation you can possibly think of. Anything you placed to be itemized, you want to have documentation to prove it. Okay. You might can get away with things a little bit on the standard, but not on the itemize. All right. So evaluating your situation. So you want to decide whether to itemize requires evaluating your personal and your business expenses. It's important to keep detailed records throughout the year. For instance, if you run a service-based business with substantial operating costs, itemizing can be more beneficial. I'm also going to give you another tip. If you have a business, do not let your spouse go file your taxes. You have to file, make sure that you're filing your taxes, because you might give your spouse, certain information, but they're missing other things. You can file it together, obviously, but don't just hand that stuff over to your spouse and be like, have at it. You want to make sure that you're there with your spouse and going through those documents to file your taxes, because ultimately, if you're the one running your business and your spouse don't have nothing to do with your business, they just doing their taxes, it might be a disconnect somewhere. So that's why you got to play nice with your spouse during tax season. You can do what you want after tax season, but make nice during tax season. Buy him or her extra dinners, send them flowers, take them on a trip, do whatever you got to do. Again, I'm not giving out relationship advice. I'm just trying to help y'all get through tax season, okay? Make nice with your spouse. So if you own a business and you are filing together, keep in mind that all of the income needs to be reported when you're filing together, and this can potentially increase your income over certain thresholds, and you may potentially have additional Medicare taxes and things like that. It does not mean you can't file together. Just keep that in mind. If you decide to file separate, keep in mind you have to talk to each other to know what each other filed, because one can take the standard, the other one can want to itemize, and then you guys want to fight about it. You will have to talk to each other and figure out which is going to work best. And especially if you have kids in there, if you are married, neither one of you are head of household. And if you both work, if you are married and you live in the same house, nobody is head of household. And next week, we're going to talk about head of household. We'll explain some of this. But I just kind of mentioned this as an extra because all this kind of ties in with each other. And these are the common mistakes that many of you are making during tax time. And that's why I'm mentioning it when I'm talking about these itemized versus standard, and when I threw in spouses, because you guys be fighting and stuff like that during tax season. And this is the time that you need to make nice with each other, because you ultimately you need each other during tax time. It's a nice incentive to file together. It can make or break a situation. It can help you or it can be harmful, but you have to work together to be able to figure this out, because you have to see if we did this together, this is where we are. If we did it separate, this is where we are. You should be able to have both picture. That's a part of tax planning. And if you're not doing that with your tax professional, shame on them. Come see me. Shane the negotiator got you, okay? So the impact on state taxes. So your decision can also affect your state taxes. Some states, they do not offer the standard deduction, or their itemized deduction is different from the federal ones. So consider the tax rules in your state to make a well-rounded decision. And again, if you have a business, you shouldn't be doing any of these things yourself. But of course, I'm here to help you as much as I can, because I know many of you are going to be like, my money funny, Shane, and I got to do it by myself. Well, you got to pay the cost to be the boss. Sometimes you got to put that money aside throughout the year so that you can pay for this tax service when it's time to do it, and have that tax planning in there so that you don't have no issues moving forward. So if you watch the previous, when I talked about Schedule C's and how you can write off your tax prep fees, recycle the money. So if you're writing it off and you get that deduction, you might get a little bit of change back. Put that little bit of change on your next year, put it in the bank account, let it get a little bit of interest. So next year come around, use that same money again to file your taxes the next time, because you paid that professional. Don't try to keep doing all this stuff yourselves, because you're missing out. But I know, y'all hard-headed and you're going to do it yourself anyway. That's why I'm here educating you, for those of you who are that hard-headed until you get it right and come see me. And for the rest of you, I'm just educating you because you should still know this information even if the professional is taking care of you, okay? So let's do another case study. So Carlos Consulting Firm. So Carlos, who owns a consulting firm, initially opted for the standard deduction. However, after a detailed review of his business expenses, including his travel, the client entertainment, and office supplies, which by any means, entertainment is not a part of the taxes for 2023. You can't write off entertainment anymore. So I probably shouldn't have put that in this example, but it's in there. He realized itemized deductions significantly lowered his tax liability. So again, remember I gave an example when I was like, one of the spouses, they could have had 40,000 in itemized deductions. Let's just say Carlos was one of those spouses that 20, well, not 27, if they're filing separately, that 13,800, that's way too low. Between 13,800 and 40,000, that's over $20,000 in deductions that's missing. You don't want that. So you definitely want to itemize. That spouse may have 4,000 in to itemize. That spouse, come up on the short end of the stick, but you guys are spouses. You probably live in the same house, but you're trying to save a little change because you don't want to file together. Or y'all like, you know what? I don't want him to be all of my money. I don't want her to be all of my money, because y'all know y'all do that. Why? I don't know. Maybe you married the wrong person, but again, I'm not giving out relationship advice, so don't listen to me on that part, right? Tonight I didn't say that, okay? But listen to me, I did say that. But you guys in the same household, so talk to each other. Maybe the one who's going to get all those deductions to offset, maybe you can give your spouse a little something, take them on a nice trip, something, whatever you got to do. Balance it out. That's where you got to talk to each other. Or just decide to file together so that everything is in the pot and y'all figure that out. 2024 moving forward, we got to make better choices, be more responsible in our business and our personal. And again, I'm not trying to give y'all relationship advice. I'm just trying to help y'all with your taxes, okay? So in conclusion, choosing between itemized and standard deductions comes down to which option lowers your tax bill, okay? So careful consideration of your expenses and consulting with, of course, a tax professional, especially me, can guide you through and make the smart choices. So teasers for next week, which I kind of already told y'all about it earlier. So it's not a teaser anymore. But up next, we're going to explore qualifying for head of household, HOH, what you need to know. This status can offer significant tax benefits, so join us to understand the criteria and its advantages. And I always forget to drop my link, so I'm going to make sure I do it this time. So it's here scrolling across the screen. The screen is also in the description, bit.ly/SD negotiator. You can reach out to me for assistance with all of this or anything else that you may see that's related to tax and accounting. All right. Of course, if you need coaching services, once you schedule the appointment there, you can just click on the questionnaire, and then we get you over there for assistance as well. So let's go some closing and wrap this all up. Thank you guys for joining this session. If you have found value, please like, share, and subscribe to my YouTube channel. Follow me on Facebook. If you happen to watch this video, make a comment, share it with somebody, DM it to somebody, send it in the messenger, send it in a text message, share it with somebody, because it may not help you today, but it may help somebody else today. And you may want to save it so that you can come back to it a later time, because even though it don't help you now, it might help you later on. Remember, knowledge is power, especially when it comes to taxes. So I will see you in the next one, and I hope you guys enjoy the rest of your day. Peace.